Hello everyone, my name is Silvio Micali. I'm the founder of Algorand and I'm proud and happy to be here with this edition of Breaking Bitcoin.
Welcome to Breaking Bitcoin, recorded live from the underground quarantine bunker. Today is Wednesday, March 25th, 2020. This is your source for everything markets and finance. If you have any questions, drop them in the live chat. The moderators will direct my attention to them during the show. Hopefully you guys are doing absolutely fantastic today. Fairly boring day in the markets today, but of course, lots of opportunity everywhere. We're going to take a look and break everything down. Obviously, what is on everybody's mind today, what is on everybody's eyeballs is obviously the Senate stimulus package. The markets are watching that very closely. We can see that going into close today for traditional markets, we can see the markets dipping down. Generally on this idea that we're not going to get this thing passed, from the standpoint of libertarian, the fact that this thing has become so important. Of course, I understand, and we'll break that down and explain it, but it's just sometimes depressing at times to watch how much emphasis and weight is placed on something that ultimately is not the long-term solution. But anyways, we'll break that down. Of course, if you guys are watching on YouTube, make sure to hit that subscribe button and turn on all notifications. Leave a like below the video. You guys can also follow us on Instagram and Twitter, where we post content you will not see anywhere else. This is your daily source. All right. So we've got a lot to talk about today in the realm of Bitcoin. We're going to look at the overall trend. Are we flipping to the downside? But before we get into that, premium group updates. The Minx strategy tester is going to be released to the alpha testers tonight, right after the show. Got about 30 more minutes of coding, just some slight touch-ups, and then that will be released to the alpha testers. Thank you so much for the bits, Forex Maestro. Hopefully you're doing awesome tonight. The Wadatar strategy tester has been released to the alpha testers for about 2 days now, getting some very good results, some very good feedback on that. I've pushed a couple updates to that. Other Pine things that need to be done this week are baseline upgrades. I'm going to push that multi-time frame upgrade. I rewrote the resolution interval function so that we can just not use trading views built in, because it is fine. But if you try to select same as symbol, i.e. current, which is what we used to do, it doesn't work. I thought it would, but I'll push the update probably tonight, if not early tomorrow morning. So I'm going to be releasing the Wadatar strategy tester to beta testers here really soon, and then shortly after that, it will be available to everybody. Now, as for the Bybit trading competition, our 4-week-long trading competition, listen, all good things must come to an end. We do need to reset the competition. There was an issue with about 10 people that registered for the competition. They registered later than they actually should have, and that caused their P&L and equity calculations to be incorrect. So I asked the community, I asked them, do you guys just want to disqualify those 10 people and continue on? But the response from the community was, let's reset the competition, give everybody time to register again, and then we'll redo it. So we will do that, okay? So we'll re-register for the competition, we'll close the current competition, pretend like it never happened, and we'll just start a new one. Registration is not open yet. It'll probably be open tomorrow, if not Thursday. These things do take time to reset and get established. So as soon as registration is available, it'll either be tomorrow or the day after. I will let you guys know, repost the link. It'll be in the descriptions down below. With that being said, we've got a lot to go over. I've got some analysis from junior analyst Jason, but of course, let's get right to the live scene and go over what's going on today. Not just in the markets, but also in the world. It's important to understand what's going on in the world so you can understand what's going on in the markets. Let's go. All right. So here we are in the live scene. All right. Starting off as we have last couple of days, just give you guys an update again, because there's a lot of false information out there. So I'm doing my best to spread the information that I know to the best of my ability is true and correct. Looking at COVID-19 over the world, 468,523 total confirmed cases, 21,000 deaths. Now, unfortunately, let me pull up my notes here. Unfortunately, the thing that I've been watching, that I've become to feel is more important day to day, is this daily increase, right? Which we can currently see is growing quite significantly, quite quickly. Because cumulative cases, if you would just look at cumulative cases, it takes a while for people to drop off, either by being resolved, and there's only two ways you get resolved from COVID-19, which is to recover or die, right? So those things take a while. I think the most important metric looking at, especially if you're looking at, how quickly is this going to kind of level off so that the economy can get back to normal, is the daily increase. And this is not updated minute to minute. For example, this latest bar is from yesterday, right? So it's not from today. To the best of my knowledge, this is being updated on UTC time. But if you just looked at this morning, you would have seen what might have been a promising decreasing bar. But news from Spain today as Spain overtakes China with death rates. Well, we are not seeing that fall off whatsoever. In fact, still seeing quite an increase. And of course, we do have more bad news pouring in, even with China coming back online. China reporting today that they had 67 new confirmed cases and 6 more deaths. As of today, all the new cases were imported as China begins to remove movement restrictions. Of course, we covered this yesterday with this QR code, this kind of QR code system that they're going to be doing. And we talked about the difference between that approach and the approach here in the United States and most third world countries where, like, for example, here in America, you can get on a plane and pretty much go anywhere. Nobody knows where you've been and who you've touched, who you've talked to, who you've congregated with, as opposed in China, they are literally tracking movements via everybody's mobile phone and this QR code, green, red, yellow system, right? So significantly different, right? I don't think we'll be able to do what they've done in China, although our government is attempting to lock us down as good as possible. But I took my daughter outside for a walk today. Again, we're doing well, but I took my daughter outside for a walk today and, people are still walking around, but largely, I'm not going to lie. It's quite different, right? It's largely ghost town, even in small places like my town. Not like that all over the world, right? Overall, I'm seeing most people respect the social distancing concept, but some places better than others. So China coming back online, but a second wave of infections beginning now. From them removing this movement restriction. This is what we're concerned about here in the United States. If we get this economy restarted, as everybody it's become a meme now, well, do we just see the rate of infection spike anyways? Not even to mention the second wave of infections, which most epidemiologists are warning, which is going to happen in the fall. Anyways, so again, we get to this point where we're still data collecting. Nobody really knows. Now, Spain, unfortunately, reported 738 deaths just in the past 24 hours. Spain has now overtaken Italy as Spain's death toll has now surpassed China days after Italy overtook China as highest death rate, right? Now, so the question here is, are we just going to see the rate of infection spike anyways? Because as I've said, they're going to have, people are going to leave their homes. It has nothing to do with the government's going to let us do this. The government's not going to be able to stop us, right? They do not have the military force or the capacity. Americans are not going to be okay with martial law. Americans are not going to be okay with being told by the government to sit in their homes for more than a month. It's not going to happen. It's just not going to happen. Whether that's good or bad, I'm just telling you guys how I believe human beings are going to react to this, right? Americans and people across the world, there's a huge dose, whether this is good or bad, right? There's a huge dose of arrogance. There's a huge dose of lack of information. As I said, even in my place, you can see people already not respecting this idea of social distancing. And we've got a very short attention span society, right? People are already bored with this. People are already ready for this to go away. And I don't think that they are prepared for the marathon that this thing really is going to be. I don't think we're going to be going back to normal anytime soon. All right. And remember, we'll get into this when we break down the Senate stimulus bill, but the medical supplies aren't there. The ventilators aren't there. The hospital beds aren't there. The medical staff isn't there. Been talking about this for a while. California Governor Gavin Newsom said today that the state has seen 1 million unemployment claims this week. And this is going to get much worse, right? I referenced this yesterday. This is from the Department of Labor. This is the seasonally adjusted initial claims for unemployment. This current estimate actually puts this. This is not correct. The latest data. I pointed this one out because this is from last week. The latest data puts this above 3 million in the United States. Right. Again, in California, just 1 million unemployment claims this week. This is going to get a lot worse. Again, initial claims are already looking like 3 million. We've never seen claims that high in the United States. It was 285,000 last week. The initial claim has never before surpassed 1 million. And again, some have projected to be in the multi-millions. It is not a projection. We are going to be there within 4 weeks. Going to see those numbers continue to rise. Now, don't worry. It's not just poor people getting hit today. Morgan Stanley, one of the biggest wealth managers in the world, said its online trading portal for wealthy clients went down on Wednesday. Most people would have missed that button when they went on the morganstanley.com, right? There's the poor people login button, and then there's the wealthy people login button. Now, people are going to be logging on to BitMEX and being like, okay, look, let me just F12, let me look through the code. There it is. Rich person login. Okay, no system overload on this portal. And now this is just like, now listen to this. The bank's message for clients was to call a service representative to place trades rather than use the company's website. A spokesperson for the firm declined to immediately comment, right? And of course, retail brokerages, not just Morgan Stanley, but a lot of brokerages have suffered sporadic temporary delays and outages this month with all of the volatility in the markets. And this is just like, I don't know if you guys, there's a great documentary on YouTube right now about 1930, about the stock market collapse in 1929 through 1933 and the Great Depression. And recommend you guys go watch that because it's just fascinating to see those kind of things. Also, I think that if you watch that, most likely what will come up next on your recommended feed is this video from the, I don't know if it's not the World Economic Forum, it's the Council on Foreign Relations. It's from the CFR. It's on their official YouTube channel about the 2008 financial crisis. So both good videos to watch. What's really interesting back about the original stock market collapse is back in the 20s is that, like the markets were like basically went essentially black, right? Back then, they didn't have the technology that we have today, but they used these tickers, right? And tickers are now artificial, but or outdated essentially. But back then they had actual paper tickers, right? And it took like 4 hours. It took 4 hours for the tickers to actually print the millions of stocks that were sold, mostly sold. There was very little buying going on Black Monday or Black Thursday is really when it started, right? We're kind of seeing that again now, right? Where it's taking time for everything to catch up. So this is with the outages. Going over to Zero Hedge, let's talk about the $2 trillion stimulus bill, and here is what's in it. So 12 hours after the Senate was supposed to have originally released the full text, all 889 pages of it. Hey, if you guys thought that our government could not get anything done, don't worry. They can sure spit text. Hey, they are good at slapping some text down, right? 889 pages. So this is a $2 trillion stimulus bill. Keep in mind that is on top of the $4 trillion basically provisions that the Fed is taking, basically with everything that they're attempting to do to secure the markets, from corporate bond purchases to ramping up, all of their repo operations. It is insane. So it's really a $6 trillion stimulus plan. We covered that yesterday, as we said last night on yesterday's show. So let's talk about this. What are we going to see here? What are their plans to stimulate spending, push tax breaks, and generally boost the U.S. economy during and after coronavirus outbreak? So the most relevant part to capital markets is described here. The secretary may enter into agreements to make loans or loan guarantees to one or more eligible businesses if the applicant is an eligible business for which credit is not reasonably available, the intended obligation by the applicant is prudently incurred, the loan or loan guarantee is sufficiently secured or made at a rate that reflects the risk of the loan and is to the extent practicable, not less than an interest rate based on market conditions prior. So they have to be normal loans, right? Then the loan cannot be longer than 5 years. All right, so breaking this down. So whoever applies for one of these loans from the federal government has to be able to prove that they have taken some kind of financial hit and that they do not have credit on hand, meaning companies that have cash stuffed away. Probably not going to happen. I would love to have that shirt on the left. That's a good one. What about this one? Yeah. Does that say dress shitty? Interesting business name. All right. B, the intended obligation by the applicant is prudently incurred. They have to have the ability to pay you back. And the loan or loan guarantee is sufficiently secured or is made at a rate that does not violate prior market conditions, right? So it cannot be usury, essentially, right? It cannot be like price gouging would be a similar analogy here. And the loan cannot last longer than 5 years. And of course, the biggest thing, all we've heard about all day long, the agreement provides that until the date, 12 months following the loan, once the loan is serviced to the recipient, that company shall not pay dividends or make other capital distributions with respect to the common stock of the eligible business. So no stock buybacks with government, let me rephrase that, sorry, because there's no such thing as government money, with taxpayer money. Okay. Now, again, I go back and forth on this myself. Stock buybacks is a good thing for the market, right? If a company feels that its stock is undervalued, they purchase their stock back. But again, what do we often see? They wait for, federal bailouts. They wait for taxpayer bailouts to do this thing and engage in this thing. And that's not good. That's not healthy. It would be fine if the government just wouldn't do that. If the government would not bail individuals out. However, there is something to be said here. If you guys go back to the Great Depression, there are a lot of reasonable arguments that back at that time, it's going to slip my mind who the president was on Black Thursday or during the time of the stock market collapse of 1929. But they refused to take intervention in the economy. Now, after that, here, hold on, let me go get this right here. Yeah, it's Herbert Hoover. Herbert Hoover. All right, Calvin Coolidge originally, and then Herbert Hoover toward the end of 1929. And they were, both of them were pretty free market capitalism guys. They refused to take intervention in the economy, right? And who succeeded them was FDR, Franklin Delano Roosevelt. And FDR instituted the Securities and Exchange Commission, rooted out a lot of corruption in the stock market, instituted a lot of laws on banking and the banking sector and stock market trading. A lot of that stuff came from FDR, right? FDR changed a lot of things, of course, with his big New Deal and providing a lot of stimulus. And the argument is, again, the reasonable argument is that people argue that the Great Depression occurred because the government failed to intervene, that this was an externality, that this was something that should have been to some point limited or attempted to prevent, because that's the point of electing a government in the first place, to help protect us against externalities. This is the statist argument. And that we would not have gone through the Great Depression had we taken action at that time. And the reason why we went into such a steep and pronounced Great Depression is because, again, the government failed to take action. And it wasn't until FDR came in and began his economic stimulus package that we began to recover from that. That is the statist argument. The problem with that is that we entered into a war, and it was only the war. And by war, I mean pillaging the country that loses, right? That's what war is. This is why governments, this is why countries, not just governments, this is why groups, when economic conditions are hard, often war is going to be the next result, because what is war? To the victor go the spoils. What does that mean? When economic conditions are strained, a country will generally attempt to prey on weaker individuals or weaker countries And what do they do when they win the war? They usurp the resources. I mean, look at how Germany was split up and partitioned, both after World War I and both after World War II. Look what happened to Africa, which was a colonial nation. Those colonies were picked apart and redistributed to, whoever was coming to prominence on the world forum of power, right? All of the European nations and America. Well, not really America, but all of the European nations. And yeah, so this is why countries go to war, because what better way to stockpile your resources that are being depleted than taking them from someone else because you're bigger than them, right? You see this on the playground. You see this in corporate America. You see this in the capitalist world all over the place, right? But again, companies receiving a government loan would be subject to a ban on stock buybacks, the term of the loan plus one additional year. The bill is largely a win for the retail, hotel, and restaurant industries that initially viewed lawmakers as favoring the airline industry. Now, generally the only thing that I hear people really talking about, not really what the outcome of this is going to mean, and it's scary because, listen, as I've said before, my general theory and thought is that the more you let government encroach upon your life, the more comfortable you are and the harder it is to say no to them, right? I believe that our country saw the greatest periods of freedom and prosperity when the role of the government was more limited, right? And we've seen an increase in overall malaise and apathy, regardless of the tech innovations that the free market has brought, not the involvement of the government. Has brought. But what individuals are looking for is, how much money am I going to get out of this? So the package provides direct payments to lower and middle income Americans of $1,200 for each adult, as well as $500 for each child. This changes from a previous version that allows low income taxpayers to get the full $1,200, and that is different now. Unemployment insurance payments are boosted. Recipients will be eligible to receive those funds for an average of 4 months, up from 3 in the prior plan, right? So I believe it's pushed up to $600, I believe. $600 plus $400. That's not gonna really help people out, right? That's really not gonna help people out in the long term, right? And it's again, 4 weeks maximum, I believe, for the government extension there. This is what's really concerning. Struggling United States airlines will be eligible to receive federal loans and direct cash assistance. So again, hotel, restaurant, all these other industries, they can get grants, they can get loans. But the U.S. airlines, which for some reason are just at the top of the chopping block here, struggling U.S. airlines will be eligible to receive federal loans and direct cash assistance if they are willing to give an option for an ownership stake to the government. Okay, we've already seen Andrew Cuomo, governor of New York, call for essentially the nationalization of American industry, right? Which I talked about yesterday. It was exactly the worst thing that you could possibly do. We talked about the CDC absolutely botching COVID-19 test kits, being unable to distinguish between laboratory water and actual samples of COVID-19. We talked about FEMA not even knowing how many gowns, how many masks, how many ventilators they were able to distribute, right? And those are national, essentially. So there's a big difference here, right? There is a difference. There's a difference between nationalizing a private industry and then just a government industry, which, again, the analogy here is that that's a nationalized entity, right? Because it's run by the state. They're not efficient. If you want to see the worst possible handling of this, put the reins of control in the hands of government, right? I mean, if you guys are not on the same page with me, that what we've seen this week is a clear demonstration of the incompetence of centralized power and authority when it comes to responding to a crisis that needs definitive vision, leadership, and rallying of resources in an efficient and strategic manner. I mean, just literally just watch back the videos from the Senate this week. Just play them back. It's ridiculous. As I said, it's possible that they're not sending their best. So, does this mean that airlines are going to be nationalized? No, the text is not that direct, but it's an expansion of government power and authority into the free market. The legislation does not include emission limits, right? Now, it's funny because you'll see these numbers start to go down, right? You'll see these numbers start to go down as we go down through this list. So now we're to small businesses, $350 billion, most of which would be in loans through the Small Business Administration. I did some more research on the Small Business Administration, and while the evidence that I have is not conclusive, again, they are a government entity. They are a state entity which provides loans to small businesses. Doesn't seem like they have the clearest. What's the word I'm looking for, right? Doesn't seem like they have the most consistent standards, right, for who gets those loans. So again, now money for hospitals, 16 billion, right? 117 billion for hospitals and 16 billion for PPE, ventilators, and other medical supplies, which clarity mission statement. Yeah. Thank you. I appreciate that, guys. So, again, maybe I'm wrong here. Maybe I'm wrong. But I do believe that as soon as I started talking about this more seriously, really talking about Corona and my opinion on it and what's going down, because, if there was ever a time to speak up, it certainly is right now. I talked about the importance of ventilators. I talked about the importance of dramatically raising, right? Because we've all seen that curve, right? We've all seen the curve. Let's see if I can draw on the screen. I can draw on the screen right here. Let's see, because we've all seen this curve, right? Where they say what we are attempting to do is flatten the curve, right? And so what we are attempting to do is, the curve all looks the same. There's this dashed blue line, which they say is the basically resources that we have available to rally right now currently in the medical industry. And if we do this, if we do everything that they're asking us to, we can flatten the curve like this, right? And there's a couple problems with this model, right? Which, if you think about it for more than a second, you can readily see. First off, what objective metrics do we have that tells us that this blue line, which is the capacity of the healthcare sector, is right there? What if it's actually down here? Right? What if that capacity is actually all the way down here? And so it doesn't really matter, the quarantine, the lockdown doesn't actually matter, because it doesn't matter whether you flatten it here or there. All of the spike in deaths all occur in the same area anyways, right? So as I've said, the most important thing is raising the bar, bring this level up here, right? And again, that is in my opinion, the effective use of this quarantine, right? I mean, we put a moratorium on flights back from China in January. That was a good thing, but we did not utilize that time well. What did we do? Absolutely nothing. People were still caught off guard in March. People were still absolutely panicked, right? The president banned flights from China in January, okay? And what do we do, right? We didn't take it seriously. We didn't talk about it. People are still walking around in a lot of places like, I don't know what all the fuss is about. Ridiculous. So money should be spent, if money is going to be spent by the government, to raise this bar from here to here, because I haven't seen any numbers from any person at any place in time that attempts to point out where this actual blue line is. Where is this line? What are the numbers objectively, right? Because the Senate certainly is not talking about it. So raise that bar up. And they only want to spend a fraction of money that they're going to throw around here, slosh around everybody, on raising that bar up, which might be the only important thing that we can do, right? So we are absolutely squandering this time. The second thing is, you can see here that on every chart that you're going to see here on television, the line, look at this rate of growth thing, right? You see where it ends on every chart? It just ends conveniently over here. It just ends conveniently on the right-hand section of the chart, right? Well, what if it actually looks like this, right? And then looks like that. Whoa, how did I turn on auto draw? So not like that. So sorry, let me start over, right? So what if it looks like this, right? Right? And we still haven't, so this is the second wave that that we're being warned about that's going to occur in the fall, right? And what if we still haven't done anything to raise the bar from down here, like literally down here, which is probably where it's at, up to here by then? Well, then it's just going to happen again. So again, like I said, guys, I don't think they're sending their best. Because I haven't seen them talk about any of this. I haven't heard anybody talk about this. Whoa, how did we get to... All right, anyways, a couple more things here, and then we'll get into everything else. Obviously, the most important thing that the Senate could have possibly focused on is Democrats have one language that bars any business owned by President Donald Trump or his family from getting loans from Treasury. Businesses owned by members of Congress, heads of executive departments, and Vice President Mike Pence also will be blocked from receiving aid under the stimulus program, regardless of whether they objectively, own businesses that are important to the economy, right? So just now, this I disagree with. A $3 billion provision in the bill to buy oil for our petroleum reserve was cut. Let's just be realistic here, guys. Every normal class, middle class, lower class, every American enjoys lower gas prices, right? Now, obviously, for oil speculators, especially traders like us, there's just as much money to make on the way down as there is on the way up, right? We could get into a long discussion about why oil is so expensive, right? And whether it should be or not. But regardless, lower oil prices equates to cheaper gasoline, cheaper plastics, a lot of cheap, because oil is used for a lot of production, right? So overall, relatively good for a lot of production and manufacturing. And we would want to stockpile that up because we cannot deny that oil is important for a lot of our energy. That's what we're currently using. That's the system that's in place, right? So it's like, listen, guys. So I think the analogy is like this, right? Regardless of where you stand on this idea of clean energy, because I don't really want to get into that. But, regardless where you kind of stand on this point, it would be kind of like saying the idea that, no, we were not going to buy any oil while it's cheap. Absolutely not. We're not going to stock up. We're not going to fill our larders, right? Would be like say you and your wife were discussing, we should get a Prius. It's good for the economy. It'll be better. Maybe we should just get a Tesla, right? An electric car. It'll be good for the economy. Okay, well, we can't really afford one right now, but we can certainly maybe start putting money on to the side and maybe start investing in that and have that plan for the future, right? But in the meantime, we do have this car right now that we need to get to work and back, right? And take our kids to soccer practice. And it's going to require gasoline, right? Because we can't really afford the Prius right now. So gasoline's really cheap. It's probably a good idea for us to stock up because it may never be this cheap again and price might go up. So let's get some extra now while it's cheap. And, in this example, it's the wife, but it just, again, it could equally be either the husband or the wife in this scenario who's being the stupid one, who's like, no, that's not good. We should probably absolutely immediately just sell our car and just walk to work and buy the Prius anyways, right? Well, we can't afford the Prius right now. I'm sure we can get a loan for it. That's kind of how I feel that argument going down. All right, last thing that I want to talk about, just a little bit about the checks here, and then we'll get into some crypto news, and then we'll get into the charts. The legislation expected to pass Congress and be signed by President Trump is going to send these checks directly to most Americans. Those making less than $75,000 per year are going to receive a one-time payment of $1,200. Married couples earning less than $150,000 will receive a one-time payment of $2,400. An additional $500 for each child would be tacked onto that. The payments phase out for those making over $75,000. Anyone making more than $99,000 will not receive a payment at all, and that threshold doubles for couples. Now, the White House says these payments could arrive by April 6th, but economists warn that May is more likely. Stimulus also beefs up unemployment insurance, increasing the maximum benefit by $600 per week for the next 4 months. And again, over $300 billion in small business loans will be available to companies who promise not to lay off workers. Well, it depends on whether you make them cover their health insurance costs. All right, keeping an eye on this stimulus here. Their details have emerged. There are no details in here. There are no details in here rather than what we've seen all day long. Okay. We're going to talk about palladium. We'll talk about the Spider Gold Trust. Really, we'll talk about SGOL, actually, but we can certainly talk about GLD. We'll look at the futures. All right, so nothing extremely here that I want to see. All right, so let's... All right, so let's talk about Bitcoin. So we've got something important going on tonight, and we are looking at a potentially significant drop in mining difficulty, that is. Mining difficulty, that is. So as you guys may have noticed, over the past few days, your transactions on the blockchain have likely been relatively slow and slightly expensive over the last week or so, actually. Anybody sending BTC. Well, you're not alone, and there is a good explanation for that. So, obviously, as you guys know, Bitcoin is designed and kind of optimized to be to have a block discovered approximately every 10 minutes. And this mining difficulty is adjusted. The difficulty to find a block is adjusted every 2016 blocks, or roughly every 2 weeks when everything is running the way that it's supposed to. And that is in order to keep the blocks coming at a nice and steady pace. Now, if hash rate increases, of course, the difficulty will increase as well. If hash rate increases, if the amount of miners attempting to mine new blocks and find new blocks increases, the difficulty will adjust upwards. If hash rate decreases, difficulty will adjust downwards. All right. So blocks will become more challenging to find, i.e. ASICs have to expend more energy. It is more costly for miners to mine blocks. The more individuals that are attempting to mine, and the less expensive and the less difficult, the less miners are. Now, so this is true regardless, right? Every 2 weeks, Bitcoin's network readjusts and says, okay, has hash rate gone up over the last 2 weeks? Let's make mining more difficult. Has hash rate gone down over the last 2 weeks? Let's make mining less difficult, right? Obviously, when mining is less difficult, when the block reward is less difficult to find, when you require less hashing power per probable unit of finding the block reward or solving the block puzzle, less profitable miners can turn on their rigs and mine for Bitcoin, right? And receive profit. Now, over the last several days, blocks on the Bitcoin network have been getting mined at an extremely slow pace over the last several days, well below that intended 10-minute interval, right? Now, we've seen this several times before in the past, right? March 11th, right? Infamous March 11th, right? Orphan blocks were slow. A lot of individuals panic sold Bitcoin all the way down. A lot of individuals panic sold Bitcoin all the way down. And of course, Bitcoin was just fine. System adapted, readjusted difficulty, and pushed up to the races, right? And there's a lot of reasons why this could be happening. Earlier this morning, let's see here. All right, so 3 blocks in 3 hours. So earlier this morning, as of March 25th, today, there was a 3-hour period where only 3 blocks were mined on the Bitcoin network, which is well below the 18 blocks that have normally been mined in that same period of time. About a week ago, on March 17th, there was a 12-hour period which only saw 48 blocks getting mined, seriously undershooting the usual target. And with slower block times, but consistent demand for transactions on the Bitcoin network, this means that transaction fees have naturally gone up for those looking to get their transactions through, to push their transactions to the front of the line for the miners. This is how the free market of the Bitcoin network works. If you elect to pay a higher mining fee, you can get your block pushed up in the priority line, if miners choose to do that, which they would because they want more transaction fees. There's also the RBF feature that was implemented, so you can actually replace by fee. RBF stands for replace by fee, which means you can broadcast a transaction to the mempool. If it's not picked up by a miner in time or eventually, you can actually, instead of canceling that, you can't cancel the transaction, you can push through a higher, basically signal that you will pay a higher transaction fee if you have the Bitcoin available, and you can sign for that with your private wallet. So very convenient. Now, thankfully, it's not a huge problem. We've seen this a whole bunch of times before. It's how a natural dynamic system is going to adjust. There is a fix for this, and we're going to see it coming through tonight with the next scheduled automatic mining difficulty adjustment, which is happening tonight. At approximately, so here in about 15 minutes, at approximately 11 p.m. Eastern time, tonight, Bitcoin's mining adjustment is going to see a historically large drop. We're going to see a very large drop in the difficulty rate. And this is going to make it significantly easier for ASICs on the network to find the next block for the next 2-week period. This is a good thing for Bitcoin miners, particularly those who have been struggling with profitability and can switch their miners back on. Now, different analysts are expecting anywhere from a 10 to 15% decrease in difficulty levels. Here's the average transaction fee. We can see the rates. We can see when the transaction fee is bumped up here. This is January of 2018. We can see when they spiked also toward the end of 2017 following the UASF SegWit. SegWit was implemented. And we can see here that transaction fees, just looking back from November 2019 to current date, we can see the increase of transaction fees over the period of March, brought on, of course, from the kind of difficulty of miners over in China. Of course, we've covered this quite a bit before. Due to the quarantine over in China, a lot of hashing power in China, even hashing power everywhere, even hashing power anywhere, being impacted and affected by this, right? Now, this is all a direct result or tied to Bitcoin's price also. Bitcoin's price dramatic drop just a couple of weeks ago when we fell from 7,000 and traded all the way below 4,000 there briefly. Now, although we have seen a recovery in Bitcoin's price back up to the $6,000 level, miners who do not have the Bitcoin difficulty level right now is relatively high. And so we've covered this before. Like, mining for those who do not have the latest equipment is largely unprofitable right now for most machines. Like S9s are on the brink. Like S9s are generally not profitable right now. You really need the latest equipment. You really need the latest ASICs. So miners with low or non-existent profit margins have been forced to turn off their machines, or they're mining at a loss, right? They've either turned off their machines or they're mining at a loss. Unlikely. Now, this means that the hash rate has been dropped dramatically. So tonight's incoming drop in mining difficulty as an automated response by Bitcoin's code to the fact that block times have slowed below the 10-minute mark is going to be a good thing for those same miners. Now, what this means for price is another question entirely. And for that, we can look to some historical data for potential answers. Let me pull up some more links. So the last downwards adjustment in Bitcoin's difficulty level was about 3 months ago. Sorry, 1 month ago, on February 25th, 2020, when Bitcoin's price was about 9.9 thousand. And 3 days following that, we did see a 12% price drop 3 days later from 9.9 to 8.7 thousand. And by March 14th, obviously, price had unraveled as low as 48.30. That's over a 50% decline in Bitcoin's price in just 3 days. Now, of course, there are some externalities to that. That is not a typical downwards adjustment. But if we look further back in history, we also had a significant down adjustment on November 7th 2019, with price at 9,300 at the time. Just 20 days later, by November 26th, price gave up about 25%, dropping down to the $6.9 thousand level, right? Now, Max Bronstein over here on Twitter has pointed to data going back as far as 2012 and has a much more bullish take, concluding that rather than being a bad omen, these down moves in difficulty have mostly marked local bottoms for BTC, right? Again, what he seems to think is that we get a downwards adjustment, but that does represent a local bottom because it is kind of the part of the cycle of minor capitulation, right? Again, one good thing in Bitcoin is that generally when people start spreading the minor capitulation narrative, but you don't see minor capitulation, it typically marks the bottom, right? Now, Mrs. Nunya Business over here on Twitter pointed to similar observations with their chart, where difficulty adjustments of negative 10% in Bitcoin have marked market bottoms, right? There have been 4 instances where an adjustment has been 10% or lower. Thursday is the next adjustment. It's estimated to be negative 10.2%. Does this represent a market bottom, right? So again, we have 2 here, 1 here, 1 here, and 1 right here. And I do want to point out that in all but one of these examples, right? All but one of these examples, it did represent that price was close to bottoming. So except for this example right here, and we'd have to zoom in, you can see price go up. But in both these examples here, we do get a pretty steep sell-off that marks the bottom, right? And even following here, you can see that price declines for almost 4 more days, right? And here, this is about a week to a week and a half of sell-off, right? So again, what does this mean for price in the short term? Again, I would think that we'd actually continue to see some selling pressure for the next few days, unless we get the odd, now, again, if this narrative plays out, right? Unless we get this odd kind of situation here where price just continues to move upwards, right? But in all the examples where price continues to move down, we can see that overall price had been moving down for some time. And in the only example where price had been moving up for quite some time, price kept moving up. So what's the difference between here in 2012 and the difference here and here and here? Well, in this scenario, price had been moving up for quite a while. In both this scenario and this scenario and this scenario and this scenario, price on average has been moving down, right? Remember that when price is generally moving down, the trend is to the downside and price is more than likely to continue moving in that direction. So if I had to put an estimate on this, I would say price is more likely to move down. Last thing about here that I want to talk about before we move on to the charts and look at the technicals. Now, as I said, those historical correlations, whether this narrative plays out or not, they may just be a fluke. But there is some sense to this idea in the first place, right? Where price drops are preceded by lowering difficulty adjustments, because as long as mining is profitable, miners are incentivized to continue mining. Like, why would you stop doing something that makes you money, right? If it's making money, you would continue to do it. And they will continue to mine until they are economically pressured to shut down their operations, or mining is not profitable. So if mining is not profitable, they're going to be forced to shut down their operations, as well as begin liquidating a larger portion of their mining rewards in order to make up for the shortfalls in profit. This is often why, as mining suffers, you see price go down, because they are dumping excess Bitcoin onto the network to fund their non-profitable operations. And this leads to hash rate decreases until finally the next difficulty adjustment occurs, resetting the field and providing new opportunities for miners to enter into the field and start grinding on the network. And as Philip Sattler, who's head of operations at Genesis Mining, described it, he says, this scenario is no different from what goes on in traditional markets, where you're forced to sell assets in order to keep the operation going or to pay for your outstanding debts. And as a miner, he has bills to pay, including electricity, rent, payroll, you name it. And these expenses are in dollars. So if the price of Bitcoin is dropping, it means you have to sell more of your inventory just to keep going. And to a certain point, it turns into a snowball effect. It just starts to snowball out of control. As price falls, miners are forced to sell more of their inventory. And as they keep selling more, this pressure drives further down, compounding the issue. And there comes a point which can vary depending on the individual whose shoes they're in. Of course, this all comes down to individuality. We all make different decisions when faced with stress, where no amount of selling can make up for the shortfall. And the only option is to halt operations until the market price begins to recover. Basically, sit on the sidelines and hope that number go up. Finishing with, quote, if this economic crisis is contained, then it will not have major implications for Bitcoin. However, if there is a real collapse, then the interest in Bitcoin will explode. It will go back to being seen as a hedge against the banking system. The more skepticism people will have in the old economy, the more they will flock to Bitcoin. All right, as normal, guys, let me know your guys' thoughts and opinions in the comment section down below. If you guys are watching on YouTube, make sure to subscribe, turn on the notifications, hit the like button down below. We highly appreciate it. It helps keep the channel going. Now, as I said, let's get over here and talk about DLive for a second, because I want to hook you guys up. You know, I biffed it yesterday, and as I said, we're going to double it up today. Billy V Official, thank you so much for the follow over there on DLive. So let's drop 100 lemons in this basket, and let's distribute these rewards. I nailed it today, guys. I want to say that I nailed it. All right, so let's get in and look at the charts. We are on the 45-minute chart here, just looking at lower time frame activity. And we don't want to be there. We want to be on the daily, and we want to work our way down. Keep it simple. We are above the daily baseline. The continuation filter is sitting down below us at 63.56. Again, we talked about that area. We talked about the buy zone area while the trend is bullish, being between the continuation filter and the daily baseline, which all premium members are going to have access to. So again, representing this nice triangle of buying opportunity between the upper channel of the baseline and 63.56 for scaled entries, or for those looking to exit their hedges at more attractive prices. Again, we have broached the daily baseline, and that means the price is actually on the daily time frame bullish. Taking a look at Minx, Minx has crossed above the zero line. WADA volume is positive. We are getting positive volume delta divergence here. Again, we have to see here, price has been going for about a week. Nice pullback would be nice to see here. We are trading within this monthly level of demand. I do expect this to kind of be the new range here for quite some time. 69.28 to 59.20, right? Nice nice $1,000 range, to be quite honest. I wouldn't expect this to play out. If we drive and continue driving above this, then that starts to get really bullish really quickly, and the narrative is good for Bitcoin. But of course, I am spot long on BTC. Should price pull down, I'll be looking for reversal baseline bounces to the upside. Let's see here. Robin from the Hood, Ricky T, DePie Guy, Midwest Attempts, and Squeaky Tadpole. Thank you guys so much for your support over there on DLive. Hope you guys enjoy the lemons. All right, no exit signals to the upside. And of course, Parallax is telling us to be conservative, because Parallax on the daily is not there yet, right? Parallax keeps us out of bad trades. No leverage risk to take here to the upside, not on the daily time frame. Have to look for those opportunities elsewhere. Getting down to the 4-hour time frame. 4-hour time frame is basically telling you not to trade. Look at that lowered volume on WADA as we've creeped into the last day or so. Basically today, pretty much has been a very boring day in Bitcoin land. Now, if the 4-hour closes above 67.75 here, we could get some action with a 4-hour continuation. Actually, Minx signaling for a 4-hour continuation long. As Parallax, though, has gone bullish and crept its way down, bouncing off the zero line and not flipping bearish. Again, WADA is telling us really not to trade. So what do we need here, guys? We need a large candle on the 4-hour for those trading the meso time frame to take price to the upside again. Overall in a no trade zone right now. So watch those movements to the upside. We need volume and volatility right now. Getting down to intraday trading. Again, today has been a rough day for trading. Looking here at the 45-minute chart. There have been some profitable shorts, a few profitable reversal trades, but again, overall, today has been not the most attractive day for trading. If we keep to the daily baseline time frame of signals, we really should only be looking to go long. And today was just not the most profitable day. However, Parallax kept you out of the market most of the day, as did Wada Atar Explosion. So let's see where we actually could have taken some long trades. Nope. No. 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 In fact, I digress. The system used properly kept you out of this market pretty much all day, which is good. And the last good trade would have been over here, grabbing this 45-minute trade to the upside. And optimized minks calling these tops and bottoms really well. Sell signal here, sell signal here, sell signal here, buy signal here. So again, directionally, I would be biased to the upside, watching for that volume. Watching for that volume push to the upside. I would be largely flat right now, as I am. Ethereum, no different. Ethereum directionally is trended to the upside. I'm going to be looking for an opportunity to take profit on my short here. XRP, EOS on the daily are flipped to the upside. Watching the BTC pairs to see them continue to slide to the downside. Looking at CME futures as we evolve. Looks like today we are going to be closing above the daily baseline on the CME futures. We've got quite a bit of time to go. Yesterday we did close in channel, and yesterday we're going to be closing above the baseline, but not above channel. I'd really like to see price close above 67.40 on the CME futures, and looking into the day here. Again, CME futures are still bearish, right? We're not quite there yet. Whoa, close. Hello. Interesting. Anyways, all right, we briefly traded above the daily baseline here before rejecting. And we are watching for that movement to the upside here. Again, need a volume push to the upside here. This is a pretty treacherous area, right? I want you guys to be protected and be safe. That's why we wait for objective signals. Looking at the futures markets, again, we've gotten these nice rallies off the upside. We seem to have put in our toe in the sand up here at 2560 on the S&P. We've stair-stepped our way down over the night. So we did a kind of a nosedive down. We did initially trade above market close here. We are since trading below that. So let's just see what happens over the course of the night. Big sell to the downside on news that Senator Sanders was going to stand against the bill. I wonder if Senator Sanders trades the SPY. NASDAQ suffering a similar fate, as is the Dow, as is the Russell. Probably the Russell getting sold into the hardest right now. So we'll see. Directionally neutral. The trend is to the upside, but this does seem like a nice flip in trend right here. As the VIX is trying to get back down below 60, but we are not quite there yet. Euro dollar having a really nice rally off the bottom over here today. And gold spot not doing much, having a sell-off and just kind of contracting in this region. Good volatility though to trade today. And again, overall, as we talked about, exiting short positions on gold and silver was valid. SPY put in its second positive close today. Dow gaining about 2%. So overall volatility is coming back. As I said, the growth is now slowing to the upside. What do we got here in the SPY? What do we have here in the SPY right now? We wicked right up to the daily baseline. So even for those intraday trading, beautiful RBB reversal baseline bounce here, giving you this nice movement on the SPY. You could have taken that on SH. You could have done that on the ES futures. Where are we at overall? Nothing. Negative volume, So not negative volume delta from WADA, but we have got a long way to go before we are trending to the upside. So for those looking to go long, just relax. Just sit on your heels. Same with the NASDAQ, same with the Dow. Same with the Dixie. The Dixie continues to have its nice fall off. Bonds, U.S. bonds, even after a little bit of a sell off, rallying now. Brent, as I talked about being cautious on Brent as we, just kind of trucked along here. What does symmetrical formation generally mean after a long trend? Typically means we're going to break and continue on in that direction. So watch Brent, watch oil for that continuation. Gold is looking interesting, but again, we are not fully there yet. We do need to close above 1625 on the daily. We broached above. Without getting the full long signal. We've pulled back, a nice couple days of pullback. Let's see if we can get a nice push on good volume and continue seeing gold march its happy little way on up to making us all rich. Same on silver. Silver's just not quite there yet. Again, Mink's calling the reversal very well down here and getting this nice retest of the baseline, right? Getting this nice retest of the baseline. And we're really in this no trade zone. Look at WADA, look at Minks. We're just not there yet. We are not fully bullish, not looking for those daily trending trades. So bonds are looking good. Commodities are looking okay. Wheat continuing to rally to the upside. It's probably one of the better trades lately. Would have been taking wheat to the upside here. Nice, beautiful pop above the baseline. Getting Mink's confirmation. Even Paralox getting in here and getting it in for this nice last leg of this rally so far on here. This nice rally on wheat. The CFD soybean. Just pulling down here to the qualifying line and the continuation filter. Interestingly enough, the CFD is actually looking a little bit better. And of course, palladium having a bull movement today. But where are we? We are above the qualifying line. We want to see a pullback back below 2257 and 2051 to get a nice entry into palladium. But good positive movement coming out of palladium. Platinum, again, also attempting to give us the long signal. All the precious metals are looking interesting, but I would be a little wary. I would be a little cautious right now. Zao Zag probably set you up for a beautiful retest of the baseline right here if you wanted to try and take this reversal short. We're just not there yet for looking for a trending short. There's just a pullback in a bullish trend, gold, Zao Zag, the gold-silver ratio. Overall, commodities are looking kind of rough. Nothing here, not really any indices that I'm interested in. Again, watching bonds right now. And moving to the world of Forex. Again, pretty decent moves. The volatility in Forex has been absolutely fantastic. The Aussie Kiwi might be signaling for a continuation short on today's close. This is going to be really beautiful to see. I've been watching for these just being patient and waiting for these resetups because I knew that they were going to happen. Largely stayed patient for the last few days after closing out one of the best Forex weeks that I've had in quite a while. Just keeping my eyes open and being very patient and watching for these moves to play out, right? So again, got my eyes on the Aussie Kiwi. Actually put that on my watch list right now. Let's take a gander here. So overall, the time to be patient and the time to wait. Already got most of my trades in. You guys can see long on the Swissy yen. My second day of being long on the Swissy yen, long on the Euro yen. Getting pullback, getting drawdown on the pound Aussie. We'll see what we look like on daily close today. It looks like an early exit to me currently right now. All right, that's about it. So eyes on that Aussie Kiwi. I don't know why I put that there. Aussie Kiwi. Yeah, that's the trade right there. All right, so it is 10:09, guys, and it is time to see if you guys have any questions today. Zuhair Nakvi, thank you so much for the 10 Aussie, my friend. He asks, how does the difficulty drop relate to the halving? It's a good question. Let me think about that one for a while. I don't really know. I don't really know because, I think that one of the largest reasons why the price of Bitcoin sold off is that the market viewed it as a risk on asset. So it was sold in the rush for liquidity like everything else. Now, the fact that we do have a halvening coming up, unless you believe, so the fact that we have the halvening coming up doesn't really have anything to do with that, right? I really don't think that, unless there's something that I'm missing here, I don't really think they're correlated whatsoever, right? Now, of course, the halving is a fundamental event on everybody's mind, but the reality is that a lot of miners have been facing extreme hardship and even shutdowns over the last few weeks. This is why we've seen hash rate come off. A lot of individuals have had to turn off their rigs due to quarantine, due to restrictions, due to lack of supplies, due to lack of resources, and of course, with the dramatic fall in price that has caused Bitcoin to be not profitable to mine for many miners. That is what's caused the hash rate to go down, and that is what is leading to the difficulty adjustment to the downside, because the Bitcoin network automatically adjusts if the hash rate is not high enough. If hash rate is lower, difficulty will go down. If hash rate is higher, difficulty will go up. So I don't really think I don't think they're correlated. I think it's just pure coincidence that there happens to be a halving coming up, right? I don't think that the coronavirus, cares about the Bitcoin halving. I don't think that the coronavirus cares about Bitcoin. Unless Satoshi Nakamoto was from the future and traveled back in time to set us free, which is still a possibility. But I appreciate the question, man. Thank you very much. But, if I had to give my honest opinion, I don't really think there's any correlation whatsoever. But I guess one thing that I could think of here, thinking about that now, is, a lot of miners that know they're not going to be profitable prior to the halving. If they want to take advantage with this difficulty adjustment, they'll be able to come back online and mine as much Bitcoin as they possibly can, because they know that once the halving comes, they're not going to be profitable anyways, right? So, all right. Wendy asks, can we look at all right, what's this say? Can we look at USO? Ooh, want to look at oil? Okay. All right. Okay, so no trade. So we are in a no trade zone. We have just crossed and closed above the continuation filter. The only trade that I would be watching for here right now, per my strategy, would be I would be watching for price to close. Sorry, just got to take this off. I would be watching for price to cross and close back below the continuation filter for the signal, for the bearish signal here. So that is how I would interpret this chart. Again, that line is coming in at $4.61. The other more riskier trade that I don't recommend, but I have seen individuals do this, is once that occurs, you kind of have this, retest of the baseline style trade on the table. So looking for a retest of, let's say, 610, which is not the trade that I would want to take. So bearish trend, I'd be bearish to the downside. But again, we can see Parallax moving up, Minx moving back up, Watertar Explosion falling off, kind of indicating that the downwards trend is falling off. That we could potentially see some upside pressure here. But again, that is very different from prices bullish. We should be looking to go long. This is the time where, okay, we should take profit on our shorts, because that's what this occurring means. We should take profit on shorts, or believe that this is not the time to be speculating to the short side on oil right now. Waiting for price to consolidate, recover, and then waiting for that objective signal to take our speculation back to the downside. Wendy, what is in my shopping cart for blue chips? Honestly, the same thing that's already in my in my pantry at home, right? The stuff that I've always bought, the stocks that I've always felt were valuable. The stocks that I've always felt were valuable, right? Just, good blue chip stocks. I'm not going to give them all, but I'll give you guys one stock that I think is really valuable. Hormel. HRL. It's one of the best stocks out there. Johnson & Johnson, McDonald's. I mean, the good blue chip stocks that have paid dividends for a long time, that continue to pay dividends. Yeah, it is what it is, man. Get yourself some Johnson & Johnson. I got some more speculative plays that I'm looking at, right? To be honest with you. The ratio for up silver to down silver. $1.92, almost twice as many speculators to the upside on the leverage fund for up silver as down silver. Now, what's this? Yeah, this is at 3x, right? So, something I'll talk about here in a little bit, but some very interesting math that leveraged funds tend to zero in the long run, right? So let's look at USLV. So here's USLV. The fact that it's leveraged means that on average over time it tends towards zero. And here's DSLV as well. Overall, both prices tend towards zero due to their leveraged functions. Now, again, this is kind of pretty interesting math. We'll be talking about that a little bit more later. Inflows and outflows continue to drop off. Volume continues to drop off in Bitcoin's price as we continue to list lazily to the upside here. We have gone down. We were at 12 yesterday. We're at 13 now in the extreme fear. Yeah. Open interest continues. Open interest is increasing a little bit here. Open interest increased quite a bit here. Right here. And then decrease. Looks like right here is the decrease where individuals get out of those trades. So open interest increased here as individuals put on shorts and then got smoked here, is how I would interpret this. Open interest increasing and then decreasing by the same amount that it stepped up. We've just whiffed it along kind of lazily, right? And overall, the sentiment on Bitcoin right now is very negative. So look for a big old screw you to the upside to make everybody FOMO into Bitcoin and then back down to the $5,000 area and then maybe 7,000. Sounds about right. Mixed day for the altcoins. Relatively decent relative to Bitcoin because Bitcoin has been lazy today. SNX, Siacoin, Raven, Nexo, Quant, Rep, Augur's doing well. DGB, Digibyte, Numenair up 8.3%, Tezos up 1.7%. Decent. Now again, looking to the state of the market again, notes and thoughts here from junior analyst Jason. He says here that he's looking at the current state of the market. I am hesitant to make a move. Thus the reason I have not removed my hedge as of yet, which is currently at an average entry of 6,300. USD value is locked in. It's the right move at this time. Uncertainty instead of trying to get greedy, especially with the looming pandemic. Long-term, bullish on BTC, but the worst is not over yet in terms of volatility in either direction due to the circumstances around the world, which of course would not play well for my hedge if it is to the upside. But the risk to reward is for me to keep my hedge as I do feel that Bitcoin we'll need to press the $4,500 range at least before we can set our sights on the moon. We've had a couple days here of positive price action, and I expect a mirror of that in the next couple of days. If I am incorrect, so be it. Didn't lose any USD in this nightmare. Sounds like a good day to me still. And absolutely crushing it over in the group, guys. All right, with that being said, guys, it's time to head for the door. All right, I want to thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis. I hope you guys have a fantastic evening. We will be here tomorrow at 9 p.m. Central Standard Time, 10 p.m. on the Eastern Seaboard. Make sure to subscribe to this channel, like this video, follow us on Twitter and Instagram, where you will see content that you won't see anywhere else. Look forward to the interviews from San Francisco Blockchain Week between myself and Samson Mao. Should be coming out in the next few days. And the other video that will be coming out is my interview with Garrett Kadera of Hedera Hashgraph. That will be coming out in the next few days. So for those of you who have been wondering or interested in Hedera, I will be speaking with their team, and you guys will see that interview. If you guys have any questions, comments, concerns, please leave them in the comment section down below. Let us know what you guys would like to see in tomorrow's video. Make sure to join us in the Discord. It's the best place to be if you guys are interested in trading. And if you guys are beginning your journey, make sure to check out what we do at premium.krakencryptocurrency.com. Would love to have you guys in our community. And of course, I will see you guys back here tomorrow at 9 p.m. Central Standard Time. As I said earlier, hope you guys have an excellent evening, trade safely, and be awesome to one another.